Hello, everyone. Thanks for joining us for our webinar this morning. This is part of our Orr Reno webinar series. We started these, I think, in March 2020. They've been going for a long time. Orr Reno has been a great partner, always preparing the latest important information for all of you, our members. So we're really glad to have Lindsay and Tony here today to go over today's presentation. I do want to let you know, for those of you that are here live right now, you can submit questions that can be answered throughout the presentation or at the end. Our presenters will kind of squeeze them in where they fit best. So to submit a question, you're going to move your mouse or tap your screen, and you'll see this button called Q&A pop up. You're going to want to click on that. And then you'll just simply type in your question. They will only be seen by the presenters here today. So, feel free to ask throughout the presentation. And with that, I'm going to turn it over to Lindsay and Tony. Thank you so much.
Good morning, everybody. My name is Tony Sayess. I'm an attorney at Orr Reno. I focus on tax and business law issues. And back in the spring, when the first round of the Paycheck Protection Program loans were available and coming out, I kind of advised quite a few clients, and on these webinars about how to apply for those. We had kind of picked a topic for this breakfast webinar several months ago before the election. We thought, oh, we could kind of update on what looks likely to happen, federally and state-wise based on those election results. Then at the end of December, President Trump did sign the latest stimulus act, which brought some additional PPP funds available to borrowers for both first PPP loans and now a new second draw PPP program. So we thought we would add that as well. So we'll be covering those topics, and I will be doing the federal and the PPP, and my colleague Lindsay will be talking about the state.
Hey everyone, I'm Lindsay Nadeau. As Tony mentioned, I will be covering the legislative preview for the New Hampshire State House. I'm a regulatory attorney, as well as government affairs and employment law and general civil litigation attorney at Orr Reno, and primarily focus on government affairs. So I'm happy to be with you all today, and I'll let Tony take it away.
All right, so we will we'll first be talking about just some of what might happen this year on the federal side. Initially, we're thinking of talking about, President, whoever won the election, in this case, President Biden, his tax proposals. Events have overtaken things a bit. And so we're probably going to have some other important kind of stimulus legislation before any kind of real tax legislation is enacted. So we're going to talk about what might happen kind of this spring and maybe also later on this fall. Both tax and stimulus side. Then we'll go into a bit on what might happen with the New Hampshire legislature. And then we will wrap up with a kind of an overview of the Second Draw PPP program. So Biden was inaugurated, and the Democrats have 50 members in the Senate, with Vice President Harris 51. So, President Biden can expect to get some legislation passed, easier than if the Republicans control the Senate. So currently, down in DC, they're negotiating what is being termed American Rescue Plan. And this looks to be, at least President Biden would like it to be, $1.9 trillion in tax cuts and spending increases. And these numbers are so huge, it's hard to put them in context. But roughly that would be the same as the various kind of emergency programs that were enacted last March, which included the CARES Act, which initially brought the the PPP program, as well as the Families First Coronavirus Response Act, which brought several tax cuts, as well as some other legislation. So it's a fairly sizable amount of money, and what is expected to be in it. So this is where you hear talking about, the additional $1,400 economic income impact payments. So this would be, on top of the $600 that were passed in the last one, which would bring it to the $2,000, which is a number that people have been talking about, as well as increases to the child tax credit, additional funds for unemployment, aid to state and local governments, additional education aid, additional money to support vaccinations. And I know that there is also talk about an increase of the minimum wage to $15 an hour. That may not be as easily passed as some of these other proposals to kind of add more stimulus. Next slide. All right, so it's likely that something is passed in the spring. You'll notice that most of that was spending and not really on the tax side. So President Biden did have a tax plan, which was what he ran on. Right now, the goal is to kind of get additional money out for people to spend and to delay some of the other proposals. So the thinking is, okay, once kind of the summer is behind us, maybe we get to the fall, there could be another federal package that includes tax and spending. And this would focus on infrastructure, which is pretty broadly defined. And the exact scope is still to be worked out. But there would be tax changes as well, such as proposal to increase the earned income tax credit for low-income Americans, increases again to the child tax credit, and there's some fairly large numbers that they're talking about as far as that goes, increase to green alternative energy credits, and some of those would be offset with some tax increases. So, the top rate used to be 39.6% for individuals. It's currently 37% for filers, with over $500,000 of income. So there is a proposal, Biden's proposal would be to increase it back up to what it used to be, 39.6%, as well as to increase payroll tax on high earners, capital gains tax rates, repeal the basis step up upon death, and eliminate 1031 like-kind exchanges for individuals earning over $1 million a year. So kind of higher income level tax increases and tax credits to families and lower income Americans. And in addition, in 2017, the corporate tax rate was decreased from 35% all the way down to 21%. And Biden's proposal is to increase it back to 28%. So kind of to split the difference there. So nothing immediate on those potential tax increases, but that's kind of what the plan is. So, is it realistic that those would be enacted? I think that people think it's realistic that there'll be a stimulus package in the spring, and whether people keep getting additional, checks sent from the Treasury is, up for debate as compared to whether they should just increase unemployment compensation. There are these arcane rules in the U.S. Senate. If there was a Republican-controlled Senate, it would be very unlikely that there would be any tax increases that are passed. However, with the Democrats, with Vice President Harris controlling 51% or having 51 votes, their tiebreaker, it is possible that some of these are enacted. And it's pretty complicated, but typically the Senate operates that you need a 60% or 60 vote threshold in order to end debate and kill a filibuster. But there are budget reconciliation rules that enable a vote of only a majority to enact certain legislation that just affects taxes and spending, so long as there are no impacts on the budget outside of this 10-year budget window. So, the Trump tax cuts enacted in 2017, those expire in 2026. But it's possible that Democrats would be able to pass something in the fall that would increase taxes and create tax credits for others if they are able to get 51 votes. And so there are several more conservative Democratic senators who they may not love the idea of tax increases, but it is possible that something is enacted in the fall. Now, if you look back at the last couple administrations, in 2009, Obama got his kind of stimulus during the Great Recession passed. It took 246 Democrats voted for it, 0 Republicans in the House, and 58 Democrats voted for it in the Senate, and only 2 Republicans voted for it. It wasn't terribly bipartisan. In 2017, when Trump got his tax cuts enacted, 224 Republicans voted for it in the House, 0 Democrats. And in the Senate, 51 Republicans voted for it, 0 Democrats. Will that same lack of partisanship, will that remain in 2021? It's unknown yet. We kind of are in a unique situation in our country right now where it is possible that the 2 different parties could come together to enact at least this next stimulus bill. One commentator has suggested, if he had to guess what would happen, then he would say that there would be a corporate rate increase, but not to 28% as Biden proposes, but to 25%. That something would happen on the minimum wage, that it would be phased in over 6 years to $15 instead of all at once. That would really kind of require some bipartisanship. And an increase on some of those top earners for over $1 million a year of income, capital gains rates, and some tax rate increases. So that's kind of what might happen this year, but so much still is uncertain. But it should be an interesting year.
Thanks, Tony. So now I'm going to talk about what we can expect to see this year at the New Hampshire State House, or virtually through the New Hampshire State House. So we do in New Hampshire generally enjoy a greater sense of bipartisanship and working together than you'll see at the federal level. That's not to say that there aren't partisan moments in the New Hampshire State House. But we do generally see more of a collective come together. In New Hampshire, we were one of the few states that swung basically from left to right. So in last year's election, the House moved from Democratic control to Republican control, as did the Senate. Governor Sununu remains to be a popular governor and kept his office. And then the Executive Council, which is the 5-member Executive Council that approves appointments and spending proposed by the governor, also shifted from being blue to red. So right now the Republicans are in control. We are going to see an interesting session. We had a taste of this last June, but we are once again facing legislating during a pandemic. So in New Hampshire, we've literally got the Senate using remote meetings We have the House did a drive-in first session in their cars at UNH in Durham. And then you also have some proposed hybrid approaches in the House, where legislators can go in person if they'd like, or remotely, then everyone else will be appearing remotely. So it really is new uncharted territory in a lot of ways, and it's especially difficult when you think about New Hampshire, which has a 400-person House. So logistically, in a pandemic, getting 400 people together is difficult, but it's also difficult to get them all on Zoom or WebEx. So there's a lot going into it this session. Really, because of the pandemic and because of those logistical reasons, you're going to see a focus on main priorities. So bills that are more controversial probably won't come up as often, or if they are, they'll be put off until next year because the session is on a 2-year cycle with the budget. So this year, as mentioned, the top priority is the state budget. We do have a 2-year budget, and this is right now on June 30th of this year. The current budget will end, so a new budget needs to be passed. COVID-19 has impacted state revenues, although not as much as was anticipated about 6 months to a year ago. So right now the deficit is smaller. We're actually seeing pretty good returns on business tax and real estate transactions, producing more revenues than expected. As anticipated, you can imagine the hospitality industry isn't doing as well, so things like the meals and room tax revenues aren't as high though. By the end of the year, the governor is expecting a slight surplus though, so that would be good news. What we're likely to see in this year's budget, because we do have Republican control, is you'll probably see some potential tax cuts or rollbacks, and that would include the business profit tax, business enterprise tax, as well as meals and rooms tax. So those are all things to be watching for as business owners. The other big priority will obviously be managing the response to COVID-19. That includes testing, PPE, personal protective equipment, making sure there's enough hospital capacity, and as you've heard recently, rolling out the vaccinations and distributing any federal funds that may come our way from any of the legislation that Tony just discussed. Some other priorities that we expect to see this year is every 10 years, redistricting happens, where the legislature is drawing the district lines for the legislative districts for both congressional members and the New Hampshire House members. So that's happening this year. So it is currently going to be controlled mostly by the Republicans. With the pandemic keeping people home, we've seen a big bipartisan push for broadband expansion. To help people work remotely, attend school remotely. So that's something I think you'll see people come together around. And the other thing is affordable housing. New Hampshire has traditionally struggled in this area, and there seems to be a greater focus on it recently. One of the more controversial areas that we've seen is the paid family medical leave legislation. And both the Democrats and Republicans have proposed their own versions of this legislation. The governor has vetoed bills that were passed by the Democrats in the last 2 years. So it's expected that his proposal or something very similar will come up this year with the Republicans in control of both the House and Senate. The other thing we see quite a lot of is privacy legislation. Those are, as you may recall, a couple years ago, there was a constitutional amendment passed in New Hampshire to say that citizens have a right to privacy. And we continue to see that expanded on by statutory changes. So that's a right to privacy with your metadata and how it's used, protection from using drones and things like that. And then another top priority will be addressing the rising cost of healthcare. The Republicans have proposed doing this through authorizing associated health plans. And then the other areas of focus seem to be telemedicine, which saw a jump with the COVID-19 pandemic, controlling prescription drug costs, which are often on the rise, and then as well as increasing access to mental health and substance abuse prevention efforts. So those are some of the areas where we've seen a focus. I'd say telemedicine and the prescription drug costs and mental health and abuse prevention. Those are areas where we'll see some more bipartisanship come around. It's yet to be seen whether associated health plans will get through. Another area where there's some common ground is child protection. New Hampshire's DCYF has gotten a lot of focus in the past and has been one of the governor's initiatives to enhance its response. So we do expect that to be an area where there'll be some legislation, again, helping prevent child abuse and address child abuse. Another area that's got a lot of attention is net metering, where, for example, solar energy companies can get energy credit on the grid. The legislature has passed this a few times. The governor has vetoed it so far. However, in his last veto statement, he did indicate that he may be in favor of limiting net metering limit increases to just municipalities. So that's something I think we can expect to see. And then the rising cost of childcare was another issue that came up and was highlighted during the pandemic. And so you may see efforts to increase access to affordable childcare, as well as workforce development in that area. This morning, the Senate Commerce Committee is hearing the Right to Work bill, which would prohibit collective bargaining agreements from requiring employees to enter the union. This has always been a hot topic in New Hampshire, and it will be interesting to see if this is the year for proponents to pass the bill with Republicans controlling the House and the Senate and the corner office. So that's something that you'll probably hear a lot about tomorrow. And then lastly, there has been a suggestion to pass legislation which would limit liability for employers who are dealing with COVID-19 in the workplace. And, you know, it's the workers' comp laws in this area are somewhat gray. Oftentimes it may not be covered. And the point of legislation would be to protect any employers acting in good faith, basically. The Democrats and Republicans have both speculated that perhaps this type of legislation isn't needed. There is a push from the business community for this type of legislation. So it will be interesting to see if that's something that continues this session. And Tony had mentioned briefly the minimum wage at the federal level. Traditionally, we do see a push to increase New Hampshire's minimum wage, which mirrors the federal law. I don't think that's something that you'll see this year with the Republicans in control. That seems to be more of a issue that the Democrats have pushed in the past, but that is something that does come up every so often. But I don't think you'll see that at the state level this year. It's more likely to come at the federal level, if at all. So that's what we're expecting this year at the New Hampshire State House. And I'll hand it back over to Tony.
All right, as I mentioned, at the very end of December, President Trump signed the latest stimulus bill after threatening to veto it. And part of that was additional, included PPP funds for both first and second PPP loans. So I don't know if anybody on this Zoom hasn't had a first PPP loan, but you know, that program to get a first PPP loan was closed in the early autumn, but you can actually apply for a first PPP loan if you didn't get one in the spring or the summer. I know many Concord businesses did get a first PPP loan, and now you know, they should be eligible, or many of them will be eligible to get a second PPP loan. There are narrower eligibility requirements, which we'll discuss. In order to get a second PPP loan, you do need to have had a first PPP loan. And you will have had to have used or will have used all of the proceeds of the first, what they call a first draw loan, prior to the expected date of disbursement of the second PPP loan. Now, as far as narrower eligibility, the employee cap, in the first PPP loan, a business could have had 500 employees. In order to get a second PPP loan, generally the employer can only have 300 employees. And most importantly, the business needs to have shown a 25% reduction in gross receipts between one comparable quarter in 2020 as compared to that same quarter in 2019. We'll go into that, those rules a little bit. There's some nuance involved. Now, those loans are open now. Generally a week ago, everybody could apply for that who was eligible. And it's open through March 31st, 2021. I know there was a giant scramble last spring to kind of, get first in line to get those. The estimates are that there should be enough funds to last. And so, maybe there isn't a panic this time around to get your application in so early, but who can tell? So, there's basically a little bit over 2 months left to apply for a second draw loan. Now, you can only get one second draw PPP loan. And another requirement is that the business could not have permanently closed. However, you could have temporarily shut down or suspended operations. So one of the big questions has been, okay, how does this 25% reduction work? And basically, if we can go to the next slide, some questions have been, hey, can you just pick a 90-day period and compare those two 90-day periods between 2020 and 2019? And the answer is no. You need to pick an actual quarter. So, for example, January 1st to March 31st, and compare that period in 2020 to 2019. Alternatively, if it is easier, what you could do is just look at all of 2020 and compare that to all of 2019 and use something like a tax return to show that 25% reduction. There are special rules that deal with businesses that were not open for all of 2019. Maybe they were formed in the middle of 2019. And for seasonal businesses. I'm not going to get into all those details, but there are special rules that exist in those kind of circumstances. And the guidance provides an example. So a borrower with gross receipts of $50,000 in the second quarter of 2019 and gross receipts of $30,000 in the second quarter of 2020 has experienced a revenue reduction of 40% between those quarters and is therefore eligible for a second draw PPP loan, assuming all the other eligibility criteria is met. Next slide. So there have been questions that come up as far as, okay, what is gross receipts? This slide here even kind of makes it a little bit simpler than the rules that exist. But basically, you can think of it as all the sales of the business, as well as income from other things like interest, dividends, rents, royalties, commissions, but not including returns and allowances. One other thing that is kind of not included is capital gains, which could impact, some folks. You would not include things like sales tax if you did collect that. You would not include affiliate transactions. And if you were something like a real estate agent, you wouldn't count things like, escrows or deposits held. Other things that you would include are things like subcontractor costs. So for example, if you're a contractor and you could have your customer go and buy something that you install, or alternatively, you could buy it and just kind of include that in their bill, you would include the full gross amount in your gross receipts. So you also would include in an applicant the income of their affiliates. So you would aggregate together affiliate revenues. You would, however, not include forgiven PPP loans and EIDL advances if you received that.
Okay, we did just a question come in, which I think you answered, but does the quarter by quarter comparison have to be traditional calendar quarters, or could it be like any 3 months?
No, it has to be traditional calendar quarters. All right, and so it's similar to the first draw loans. To calculate the maximum loan amount, it would be 2.5 months of average monthly payroll costs. However, there are some exceptions to that. And in order to calculate, well, what is your payroll cost? You could use either 2019 payroll costs or 2020 payroll costs, or technically you could use the 12-month period prior to when the loan is made. So if you applied March 1st, you could have the period March 1st, 2020 to end of February 2021. A little more complicated to figure that out. So there's some slides that are in here that I can share with others. Last spring, when the guidance was coming out, everything was very rushed. It was a brand new program. People were overwhelmed. This time around, thankfully, they've pushed out guidance much more quickly, and they've provided a lot more detailed guidance. So I have some slides on how to do some calculations, but I'm not going to go into it in great detail because there are some really good resources that walk applicants through step by step how to do certain calculations. For example, how to do the revenue reduction calculation, and most importantly, how to calculate what their maximum loan eligibility amount is and what their payroll costs. Keying into tax returns and exact line items on tax returns. So if anybody has any question about that, I'm happy to kind of share that guidance with everybody. But there are different rules for how to calculate what the maximum loan amount is if you are a self-employed individual filing a Schedule C and do not have employees. Next slide. Or if you are self-employed and you do have employees, and this could be something like a single member LLC would follow into this as well. And next slide. And then also, if you're a partnership or an LLC that has multiple members, there's again detailed rules now to how to make these calculations, keying in to various lines on the tax returns that have been filed in past years, or the drafts for 2020. All right, as I mentioned, there are some special rules geared to hospitality businesses. They've been hit, much harder than some other businesses. So instead of having a 300 employee cap to be eligible, it is 300 employees per location. I don't know if that really affects too many of the Concord Chamber members, but that is a rule. But very importantly, instead of just being eligible for 2.5 months of average payroll costs, those types of businesses are eligible for 3.5 months. So that should be a good help for them. As far as the rules go, similar rules to the first draw PPP loans. There's no collateral required. There's no personal guarantees required. The interest rate, which hopefully interest will never be repaid because it'll be forgiven, 100 basis points or 1%, 5-year maturity. Again, hopefully it's forgiven before that time. And the same types of forgiveness rules apply to these second draw PPP loans. Now they have expanded the uses for PPP loans. So still you could, you need to, in order to get full forgiveness, use it for payroll costs, but they have clarified what some of these payroll costs are. And they've made it clear that you can use them for group life, disability, vision, and dental insurance. So that's great clarification. You can still use it for interest on business mortgages, for rent, utilities, and other debt obligations incurred before the covered period. And they've added some new categories for what PPP can be used for. You still need to use 60% on payroll costs to get full forgiveness, but for that other 40%, you can now use it to cover quote unquote covered operations expenditures, where it seems to cover quite a bit. Certain business software, payroll processing, human resources. It's very vague. I don't even know what that is supposed to totally cover. Sales and billing functions. Again, it seems like it could cover a lot of things. Accounting costs. In addition, covered supplier costs. These are supplier payments that are essential to the borrower's operations and were made either pursuant to a contract order or purchase order in effect prior to the covered period, or with respect to perishable goods pursuant to a contract order or purchase order before or during the covered period. So if you are in the business of selling stuff, or if you're a restaurant and ordering food, it seems like it would cover a lot of that, potentially. In addition, now included are covered worker protection expenditures. There's a lot of stuff here that they're using as examples, improvements to ventilation or filtration systems and physical barriers, health screening capabilities, and importantly, personal protective equipment. So, they really want, they don't want anybody to do their calculations and say, oh, I didn't use my PPP loan on eligible uses. There's a lot here that you can use them for. In addition, now is covered property damage costs. New Hampshire, fortunately, didn't really experience a lot of looting and vandalism from protests last year, but that was thrown in there as a good use as well. So in applying for a second draw PPP loan, there's a couple of documentation issues. Okay, first is similar to the first draw PPP loans, calculations relating to payroll. Now, there's a very useful rule here that if you use in your second PPP draw, if you use your 2019 payroll to do the payroll calculation and you use the exact same lender, you don't need to submit any additional documentation for the payroll calculation. That can be very helpful to borrowers. In addition, in order to demonstrate the revenue, the 25% or greater revenue reduction, if your loan is, the second draw loan is greater than $150,000, you do need to submit documentation at the time that you submit your application showing that. And you can include tax forms, including an unsigned, assigned but unfiled 2020 tax return, or similar, financial statements, bank statements, etc., to show the revenue reduction in at least one quarter of 2020 compared to 2019. If the loan is for $150,000 or less, however, you do not need to submit that documentation at the time that you submit your application for the loan. Instead, it needs to be submitted by the time you apply for loan forgiveness. So that should really speed things up for smaller borrowers who are willing to use the 2019 payroll and applying for $150,000 or less. Really, there's no additional documentation needed right now, just to submit the actual application. And again, I'm not going to go, this the slide is there to help anybody. If you want to apply for the second draw PPP loan and you want to go with a different lender, or you did not want to use your 2019 payroll costs, there are very clear, well, I don't know how clear, but they're detailed instructions on how to do the calculation of your payroll costs. And it will differ depending on whether it's a self-employed Schedule C filer, or with employees, without employees, or another type of taxpayer. We can kind of skip ahead a few slides till we get to the actual loan application. So like the first draw PPP loan, there are a number of certifications that will need to be made. I know there were a lot of questions back in the spring, especially about the certification that is current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. It's as vague as it was back in the spring, and you have to be comfortable making that certification. I have heard, from New Hampshire's SBA, they are very much encouraging people to apply for these. I know that some potential borrowers do struggle with making that, especially if in the second half of 2020, their business really turned around. Technically, they would probably be able to meet that 25% reduction test based on the first or second quarter of 2020. At least our local SBA folks are saying, don't let it stop you that you had a really great fourth quarter. Don't let that prevent you from applying for a second draw loan. Other certifications, have to be made, including that you're going to spend the funds on the eligible uses, but that now includes operations expenditures, supplier costs, the PPE. One other nuance is that you have to certify that you're not going to get a shuttered venue operator grant from SBA. So that would kind of exclude some potential second draw borrowers. Now, if anybody else has any questions, I kind of went very quickly over, especially how to do some of the calculations, and I'm happy to share, that SBA guidance on how to do that. But I'd rather spend a little more time on Q&A to the extent people have any questions.
So just a reminder for people, you can submit a question if you click on Q&A and just type it in. I do have a question for you guys because I was recently helping to host another webinar with Checkmate Payroll Services about the employee tax credit. So they talked a lot about planning your PPP and amount and planning to spend, close to 40% on those other, non-payroll items. Do you need to know that well in advance? It sounded like you don't need to until you apply for forgiveness. Is that right?
Well, I mean, I think most borrowers are hoping for the forgiveness. So I would certainly have a plan in place to say, hey, we want to, it's not just that we want to borrow this money, but we want to have a plan to spend it in a way that's going to enable us to get, 100% forgiveness or something close to it. So, I think it would certainly be wise to kind of have that plan in advance before I got, the loan disbursement from the bank.
Yeah, makes sense. That was a great overview of PPP. It's a very confusing, there's a lot into it, and you guys simplified it. For those of you watching, we will send these slides to you so you can go back and read in detail all of everything that Tony outlined here very carefully.
And Emily, just a note, Tony and I both have our contact information on the last slide. If people do have any questions, they can reach out to us after too.
Great. So I will go over some quick chamber news real quick, but you guys can continue to submit questions if you have any. Feel free. Let me just get this screen share going. 1 second. All right, I just want to let you guys know about some stuff going on here. Tomorrow, we're having a virtual member briefing. This is great if you are a new chamber member or looking to become a chamber member. It's kind of an overview of the programs we offer, the benefits for you as a member, all of those things. It is a Zoom meeting, so there's a lot of discussion, a little bit of networking, which is great. This Thursday, we have a webinar about vaccine rollout. So that's a great one to tune into if you're interested in that. Our Citizen of the Year nomination deadline's coming up. This is our biggest honor of the year. So if you know someone who during 2020 really stepped up in the community, we encourage you to submit that. And then if you have not tried our virtual networking events, I definitely encourage you to check them out. They're a lot of fun. We put you in smaller breakout groups so you can socialize with a little group of people that's manageable. And you can do it from the safety of your home or office, whatever works for you. So that's my news here from the chamber. I don't see any questions at this point, but we will share with everyone who registered Tony and Lindsay's contact info so you can follow up. The slides will have a recording of today's session. Anything else you guys want to add today?
Yeah, just reach out if anybody has any questions.
Thank you, Emily, for all of your help.
Yeah, thank you so much for being here today. Thanks for everyone who could join us.
Take care.